Hey everyone, AMarket traders and AMarket partners, welcome back to YouTube channel. In this video, I am going to explain most important topic of trading and investing. Let me ask you a simple question. Have you ever seen that RSI trading above 70 and immediately sold off, or RSI value trading below 30 and immediately bounced back from that lower level? If yes, then don't worry my friend, I am going to explain this topic in an in-depth manner so that even if you are newbie, intermediate or advanced trader, you will understand this topic in a most efficient way, right? So the topic name is how to deal with overbought and oversold zone in a proper manner, or we can say that how to deal with overbought and oversold traps, right? So without wasting any time, I'm starting with this. First of all, let me explain you what is RSI. RSI is a relative strength index. It helps us to understand the relative strength of the price. So this is a momentum indicator. So how to plot this? Just go on to the oscillator and just select the RSI. You will find out that period by default 14, just keep as same as it is. Just you need to change just the source rather than open, just made it to close and add it. Now majority of the traders use the 70-30 as a overbought or oversold zone, but some of the traders use 80 and some of the traders use 60-40, but I am going to keep same as 70 and 30. Now how old school used to trade this? First of all, let me explain you what old school used to do. As and when RSI value crosses above 70, they used to book their profit, long profit, or either they look for reversal sort of trades. It means they used to look for short sort of trades, right? As and when RSI value crosses above 70, this is what they used to do. And as and when RSI value crosses below 30, they used to book their short profits, short trade profit, or either they can look for long trades over here. This is how they used to trade. But in modern time, we cannot follow the same old school method. So I am going to explain very unique methods, right, from my experience, 13-14 years of experience. So stay tuned. So how we will deal with this? First of all, you need to understand and you need to clear that what kind of trend is going on. If uptrend is going on, if uptrend is very strong, if primary trend is in an upward trend, just do one thing. Don't look for RSI above 70. This is what you need to do. The first way I am going to explain, don't look for RSI above 70 if uptrend is very strong. So what you need to do, instead of above 70, you need to look for RSI value below 30. As and when RSI value crosses below 30, that is the point you need to step in, right? So let me show you this strong scenario. So this is a strong upward trend is going on in the market. If you see this strong upward trend is going on in the market, so what you need to do, above 70, just avoid it. Why I'm saying this? Because many of the time, even if RSI value crosses above 70, still price used to continue that same existing trend. So that is the reason, because 30 to 40% of the time above 70, it might exhaust or it might reverse from that point, but 50 to 60% of the time in strong trend, it will continue the same existing trend. So what you need to do, instead of above 70, you need to look for below 30 in a strong upward trend. So if you see this scenario, the prices in a strong upward trend, as and when RSI value crosses below 30, that's where you need to enter into the market for the long side. So if you see this is the low. If you just match it, this is the low, 1500 is the low, and RSI value crosses below 30. Then after RSI value bounce back about 30, and also price bounce back from 1500, 1600 level, and you see that price moved like anything. So if uptrend is going on, if uptrend is very strong, what you need to do, just look for the RSI value below 30. If you are following 80-20, just look for RSI value below 20. So by doing this, you can able to position yourself at the lowest point of the market, or we can say that at the lowest point of the reversal point, right? So this is how you can trade when strong upward trend is going on. But what you need to do is, I'm going to share you some bonus tip at the end of this video. Now if downward trend is going on, if strong downtrend is going on, what you need to do is just look for the RSI value above 70 rather than 30. So you will look for the overbought scenario when downward trend is going on, right? And if upward trend is going on, you used to look for the oversold scenario. But now let me explain you the downward trend scenario. So this is a strong downtrend. I can see that now if you see this whole scenario, RSI value as and when RSI value crosses above 70, this is the time that you need to look for short trade rather than buy trade. Let me explain you this on a different time frame rather than daily time frame. So if you see this is a strong downward trend going on in the market. Just 1 minute. So as and when RSI value crosses above 70, this is the time where you need to look for the short trade. Just you need to follow the same existing trend. So by doing this, your probability of success will increase automatically. Also, you can align your trade with the existing trend. So just if you see this 7 or 8 out of 10 times, you might get success by doing this, right? So if you see this one more scenario, as and when RSI value crosses above 70 and as and when it trades at important resistance point, that's where you will get the success. So if you see this is an important resistance and price, as and when price tap this resistance, also RSI value tap the same point and see the reward from that point. So this is how we can use it. So let me share you a different way now. So first way I'm again explaining, if uptrend is going on, just look for the RSI value below 30, and if a downward trend is going on, just look for RSI value above 70 rather than 30. Now, how to deal with this scenario in another way? If you understand the price action, if you understand how to mark the support and resistance, this is where this will play an important role. So example, if I am aware about the important support and important resistance, so this will work for me. Example, this is an important breakout point, and the same breakout point, at the same breakout point, price retested and also RSI value tap below, crosses below 30. So even if in a downward trend, this will work for you below 30 concept, right? Why it is working? Because you are entering at the point where probability of booking of shorts and entering of new buy trade is at a very high point. So what you can do is, if price entering at an important support, just look for the RSI value, whether it is trading below 30. If yes, then you can look for long scenario over that point. But these are the exceptional scenarios. Even if you are having a knowledge of looking for the bullish divergence and bearish divergence, you can merge this concept over here. Example, RSI value crosses below 30 on a daily time frame, price reach at an important support. What you can do is look for important divergence over that point. If a divergence is also there, definitely it will work for you in a most efficient way. If you look at it, if you look at this, there is a long divergence, long classic bullish divergence is there on H4 time frame, and price tapped crosses below 30, RSI value crosses below 30 on a daily time frame, price tap the important support on a daily time frame. This is where you can look for a low risk high reward buying opportunity instead of selling opportunity. So this is how you can work in a this is how you can play this in a most efficient way. Right now, let me show you an example of resistance scenario. Now this was the case, right? This was the case. If you see this is an important support, right? So how I mark this important support, I explain you. This video is already there on YouTube, how to mark the important support and resistance using opposite candle theory. So I mark this using this green bar. Now price, as and when price tap this point, we know that price is there in a strong upward trend, but instead of the same, we follow what? Price retested this important resistance after a long time, and also RSI value crosses above 70. And if you look at this, there is also a divergence scenario. If you look at this on a H4 time frame, whether there is a divergence or not, if yes, definitely this would be a low risk high reward opportunity for you, and you can use this in a proper way. So let me explain you. So if you look at this point, there is a clean classic bearish divergence, and price tap the important support resistance on a daily time frame. Also RSI value crosses above 70 on a daily time frame. You can look for low risk high reward selling over at this price point, right? So by doing this, you can deal with this overbought and oversold zone in a most efficient manner. Now I'm going to explain third last way. This is the last method that I'm going to explain, how to deal with the overbought and oversold scenarios. Now what you can do is just mark the important high that is made in RSI. So this is the important high. This is the important high that is being made. So what you can do is, this is important 78, 79 is the important level. Why? because this is the point where RSI value rarely touches, right? So what we can do is, as and when RSI value tap this level, you can look for kind of reversal sort of opportunity. So this is how you can deal with this overbought and oversold zone. So this is an important overbought scenario. As and when price tap this point, this is the important point for you. So now the next another RSI high is being made. So what you can do is, as and when price touches RSI value touches this point, you can look for buying exhaustion. You can look for some sort of reversal opportunity. Same concept works for overbought scenarios. Just look for the RSI value. What is the low made by this RSI? So this 20, as and when RSI value touches this 20 level, this is the point where we can look for a low risk high reward buying opportunity of kind of reversal opportunity. If you see this price made a low and exactly from this point it bounced back. So this is how we can deal with this concept. And now this is another low is being made. So what we can do is, we can mark this also. As and when price hit this level, RSI value hit this level, there is a probability that it can bounce back in a most efficient manner. So I'm summarizing this. First step, first method, how we can deal with this. If strong upward trend is going on, just avoid the RSI value above 70. Just look for RSI value below 30. If strong downward trend is going on, just look for the RSI value above 70. Just avoid below 30 level. That's the first method. Now second method, it's a contra method. How we can deal with, even in a strong upward trend, just mark the important resistance. Marking an important resistance, and as and when RSI value crosses above 70 and price tapping this important resistance, look for some sort of reversal trade over here by confluencing with some sort of classic bearish divergence, and you can look for the short, right? In a strong downward trend, mark the important support. As and when price tap that support, look for some sort of and as and when RSI value crosses below 30, look for some classic bullish divergence on a lower degree time frame, and by looking at a also look for some sort of reversal pattern, and you can go long over there, right? And the last method is, mark the most maximum high that is made by RSI. So in this case 78 and 86. As and when RSI value tap the same level again, there is a probability of reaction to that level from that level. And same scenario, mark the lowest point that is being made by RSI, mark the same point. As and when RSI value tap the same level again, look for some sort of reversal opportunity at that point. So this is how we can use it. I hope you enjoyed this video. If you want more such insightful videos, just comment in that we want more insightful videos, and like it so that we can get a motivation. Thank you. Bye bye.